focus on FX. We both focused on FX in the beginning. I think Boris has expanded to gold, US 30 and other asset classes. And we're constantly looking at the markets and looking for good opportunities for trading. And, we always, at least I always, kind of trigger or drive my trades from a fundamental perspective. So that's why I'm really excited. When we talk Mondays, we always get the opportunity to talk about, what's in store for the coming week, and where the opportunities can lie.
Awesome. So Kathy, would you fancy yourself a macro trader then?
Yes and no. I mean, I am focused on the global macro opportunities, but I have my technical tools and strategies to basically identify my entry and exit points. So at the end of the day, it's all because if I just consider myself a global macro trader, the biggest mistake would be that I would say, okay, I am, bullish dollars, and just look for every opportunity to buy. What we want is the technicals. What I want, the technicals, fundamentals, and sentiment to be on my side for every single trade. And that's where the trader in me comes out over the analyst. And
Got it.
I may have an overall thesis. I need to make sure the technicals and sentiment confirm that thesis.
Got it. So you're taking a macro look when you're looking for technical confluences.
Absolutely.
Very cool. Well, I'm sure we're going to get into a little bit about how exactly you do that and show us some charts. And Boris, how about you? Tell me a little bit about your trading philosophy and your strategy overall.
I trade flow. So I trade primarily very, very short-term directional moves that are really focused around time of market. Like I have my whole trading framework is based on three questions in order of priority. What, meaning what instrument I'm going to trade, when I'm going to trade it, and how. As you notice, how is by far the least important aspect of it. Which is very different from how most people trade, which is where they put how as the primary thing. To me, our trade right now is literally as simple as the market is in an uptrend and it's a green candle. That's literally all we need to do in order to enter something, because the most important thing from our trading perspective is the time. That is when people are really, really focused on like market open times or market close times, when there's lots of participation, so you have lots of directionality. What we're trading, basically, we're trying to capture directionality, which is, a fancy word of saying trend. Trend
Right.
happens only at very particular times intraday in the market, and we focus on that. And then there are very specific instruments that tend to trend much more than others, that tend to have more continuity than others. We focus on those. What's ironic about all of this, by the way, is that the strategy that I employ works amazingly well on news. We just started using it on news because if you think about it, post news, not pre-news trading, like we don't anticipate news, but post news trading is really all about flow.
Sure.
The market reacting to the flow, and
everybody's gonna be jumping in, trying to grab that flow, trying to follow that momentum.
Right. And if you follow our framework of like, what is the instrument most exposed to that particular piece of news? When is the news happening? Is there a fire alarm in your house?
Tornado warning.
A tornado? Seriously?
Yeah.
Well, because you guys have just had horrendous weather. I mean,
we sure have. So
my
I'll keep you. If you see me ducking, you'll know where I'm going.
Right. Wow.
But I'm sorry about that. Go on.
It feels like you guys it's like we just passed over Passover. It's like you guys are getting all of the.
It sure is. It sure is. We can't catch a break.
Biblical injunctions against you. So if you think about it, post news flow, what instrument is the most exposed? So for example, in FX, today we didn't trade this, but it was just a beautiful setup. Dollar yen, Empire came out. Empire came out much hotter than expected, so that's very, very positive. Dollar yen spiked, on the news. And then if you traded our flow, you traded continuity on dollar yen, there was a tremendous amount of continuity, worked like a charm for 10, 15 pips to the upside. We did CPI. We did this with CPI on when I was, last week we were on vacation. I was trading from Jamaica. Still worked great. I was sitting literally in a little closet because this was a resort and they clearly don't have business. Their business was literally a little closet. and I'm sitting there like, hunched up, and it was still perfectly fine. We traded the strategy perfectly well. So yeah.
Speaking of this morning's price action, the way I trade is, I always look at what other markets are telling us. And I think, it's a very important thing to incorporate into your trading. So one of my favorite things to look at is US 10-year bond yields. And throughout the morning, even though, when we started the New York session, I start trading at around 6:15 New York time. We had very consolidated markets. Nothing was happening and we were seeing no action. But the one thing that was happening was that US yields were up and they were trending higher. And so, leaning on the long dollar trade was what we were looking at the start of the New York session. Now, of course, that didn't really trigger the take profits until the Empire State Index came in much firmer. But still, the long dollar trade was the trade of the morning. And the reason for that, and the reason that we saw that was the increase in treasury yields. Now, there's a bigger story, of course. I posted on Twitter and I was on CNBC last night talking about how last week we had a string of weaker US data, inflation data, retail sales data, big disappointments, and everyone was looking at the less hawkish Fed comments as a sign that maybe the Fed is not going to raise interest rates in May. But yet, what I said at the time was that I believed the market was underpricing the possibility of more Fed action and overpricing the chance of a rate cut in the third quarter. I thought they were too aggressive in thinking that the Fed was going to shift gears so quickly, especially since Fed fund futures were pricing in an 85% chance of a quarter point hike in May. So you got the Fed pricing in you got the market pricing in such a huge chance of a rate hike. You have the dollar down so much. You have, barely any really significant US data this week. I mean, yes, Empire is interesting, and so are the housing market numbers, but they're not like payrolls or inflation or retail sales. So the chance of a relief rally, even before we got the Empire State this week, was strong. So, that's kind of the way I look at things, which is number one, we have what the global macro picture is. Number two, we have what other markets are telling us, like, the US yields. Number three, we have sentiment, what's priced into the Fed fund futures. And, then we have, what I think, is going to be the general tone of the day and what the technicals are showing us. For me, everything was, all the dollar was basically in the buy zone against the Japanese yen. And I'm happy to show you those charts later. Those of you that are just joining, Twitter Spaces, we've got the YouTube stream link for you to watch the charts. And, basically, all my charts were showing buy dollars, buy dollars, buy dollars. So that's how, I take the whole big picture and the individual elements and combine them together for the best trading opportunities.
So, Kathy, let me ask you this. For people who are new and people who aren't so familiar with taking a macro look, where should they start? What should they look for on a daily basis? Give them maybe a best protocol for somebody new. Should they look at news? Should they look at world economics? Where should they start? 2 or 3 things to help somebody new learn the macro side of things.
I'll tell you how I start.
Sure.
Every single day, I start my day by, number one, looking at the economic calendar. What happened overnight? What happened when I was sleeping? And what numbers are expected today? I mean, minimally, even if you consider yourself a 100% technical trader, minimally, you have to be aware of what's on the calendar. Because the worst thing you could do is try to pick tops and bottoms in this consolidative mode on NFP morning, thinking, nothing's going to happen. And then, later on, the NFP comes up and it blows everything up. So minimally, as a trader, the first thing you should do is look at the economic calendar. And that's what I do. Take a look at the reason. I was all over the short Kiwi trade this morning. And the reason for that was because last night we had weaker PMI services. And that, that told me that selling Kiwi was probably one of the best opportunities. It took a long time for the trade to actually work itself out, and it did. But the calendar. Number two, take a look at the news flow. I think the best place for, comprehensive news snippets is basically Forex Live. They basically give you all of the key headlines that you need to look at without, obviously it's on Twitter, so there's not like a tremendous amount of information that you need to know. So you're able to scan it and see what some of the big headlines were in the last 12 hours or 24 hours and what's important. And then, if you want to look beyond that, what you can do is, just scan the headlines of CNBC.com, scan the headlines of Bloomberg.com or MarketWatch, just to get a sense of what everyone's talking about that day. So that's what I do on a day-to-day basis. But if you want to learn about kind of broader macro,
Excellent.
It just takes time to kind of follow the news feeds, and also to follow the Twitter channels. I also have a heat map. Let me share this with you if you don't mind. Can I share my heat map?
Yeah, please.
Okay, hold on one second.
Yes, of course.
I'm going to move it to a different screen so I can share that appropriately. So I put together a heat map. Can you see my heat map? So I put together a heat map for our BK Forex traders every day. And it's not every day, but every week.
And before you get into it, would BK Forex members have access to this?
Yes, it's available to all BK Forex members. And
okay, wonderful.
So what I do is I synthesize all of my fundamental analysis into these tabs. And if you click on any of these tabs and you span them, you get more information on why I have a specific view. And you can also choose by currency pair. Like, how does Kathy feel about, for example, Euro Aussie? Oops, sorry, that's Swiss yen. But Euro Aussie. And you'll see that I'm bullish Euros and I'm bearish Aussie. And then you can see the reasons why I'm bullish Euros and bearish Aussie. And yes, Corey, this is available for all BK Forex members. And if you're taking the Surge Audition, you have access to, the heat map, our trade ideas, our indicators for 30 days. And all you need to do is, contact us, and we'll, and you'll share it with us, your Surge information, and we'll get you all set up.
Right.
But what I do is I, basically express my views on, what I think is going to be transpiring for the week for each of these major currencies. We also have a webinar every Monday that we did at 9:30 this morning. And I explained, for example, I'm neutral dollars this week because, yes, we had a significant amount of weaker data last week. And so that should make me bearish. And I explained to them everything we just talked about, which is that, there's not much going on this week. And the market's underpricing the chance of a Fed hike. And so I think the dollar is going to bounce. So even though I had a neutral outlook, I kind of explained why that outlook was neutral and, why we were thinking and trading a certain way. So I do all the work for you, and I kind of summarize a neat little table here. And so you don't have to do the analysis yourself and try to figure out.
This would be a good place for somebody who's interested in learning macro to come, just to get an understanding of how these things interact with each other.
Absolutely. And we talk macro every single day. And I think, and also on Twitter, I post a macro 60-second market outlook. So I try my best to help our members to really understand the macro drivers on a big picture basis, as well as on a, shorter term basis.
Wonderful. Thank you. And guys, as Kathy just mentioned, anybody who auditions with a Surge account gets free 30-day access to BK trading. So definitely take advantage of that. You can check it out on our website, check it out on our customer support as well. And you should have a slew of emails about it as well. So definitely take advantage of it. It's a great resource.
There's one thing that Kay forgot that is really important that she looks at every day, which is yields. And you notice that she was talking about that earlier. U.S. yields are the 10-year, and even like you probably have like U.S. yields, UK, and maybe European. Really, really important because they're important for every single market, and I think most retail traders completely underappreciate that. All other markets are just derivatives of the bond market. It's really about credit. Certainly FX is very affected by it because if you think about currencies, they're just nothing but ultra short-term bonds that provide interest rate. So the higher the interest rate, the more valuable the currency is, unless there's a huge inflation component in it, like unless it's an Argentinian peso, where it doesn't matter how high the interest rate is. Nobody wants it. But in general, global G7, major economies, that's what drives currencies. But it also obviously drives risk, which is equities. The higher the interest rate, the lower the price earnings ratio. The lower the interest rate, the higher the price earnings ratio. All of that tends to have an impact on a longer term basis, but also on an ultra short term basis. So it has all these flows, and you constantly watch them. So that's
and I want to show how I fused this with technicals. So we talked about let me just pull up my dollar yen chart. We talked about how yields, if you look in the upper, hopefully when my chart loads, when you look on the my watch list, you'll see that US yields are up 2%. So I think I need to I'm just reshared my screen, producer, if you want to show it again. And for those of you who are on Twitter live, I go to the YouTube link to see the chart. So on the right-hand side, you'll see 10-year Treasury yields. They're up 2%, and they've been trending higher throughout the day. And this is the dollar yen chart here. And in the dollar yen chart, you'll also see consolidation and then a break higher. Now, you're seeing the background here, which is green. And when the background is green on this chart, it indicates that the dollar yen in this chart is in my buy zone. So as a rule of thumb for me, I'll only be looking for opportunities to buy dollar yen when the background is in green and the currency is above the indicator line. So that's why this morning, with the technicals showing me the dollar yen was in my buy zone, the yields showing me that it was a pro-dollar environment, and my general view of fundamentals, this was a very, very strong it was a trade that had a really strong conviction in. And, we had this opportunity, and actually I was riding Kiwi dollars from earlier, and we were riding Kiwi dollars since the Asia session off of the PMIs, and still same story. The background is red here, which means that it's in my sell zone. So I was looking for opportunities to sell Kiwi and buy US dollars in the Asian as well as the North American session. For those of you that like to trade gold, the gold is priced in US dollars. So it was, a pretty easy trade. And if you believed that the dollar was going to continue to rally, the gold was going to break that 2000 mark and it was going to fall below it. And you definitely should be looking to buy gold when you have what you're seeing here, at least, if you're one of my traders, which is that gold is in the sell zone. It's below.
Wait, you mean you should be looking to sell gold, not buy gold. You just said
you should not be looking to buy gold.
I should not be looking to buy gold. Okay.
Yeah, you should not be looking to buy gold if you're one of my traders, because the background is red. It's below the indicator line. So you should be
Kathy, can I stop you for just a moment? For our new viewers and for our folks who aren't familiar with your indicator, can you just give a brief synopsis of what it is, what it's doing, and why it's green and red?
Right. So that's what I'm trying to explain, which is, this is my ZIP indicator. I've been trading it for years, and we've done extraordinarily well, this year as well as through the past years. And unlike Boris, who's always coming with, shiny new toys, I find something that works and I keep with it. So my ZIP indicator trades 1 hour charts, and it's designed to be simple to read and to minimize impulsiveness. And the way to use it is basically if the instrument, like the currency pair or gold, is below the indicator line and we have a red background, it means that it's in the sell zone. If it is above the indicator line, like you see over here, and the background is in green, it means that it's in the buy zone. So basically, you want to be looking for opportunities to buy when it's in the green zone and sell when it's in the red zone. Now, what you really want to look for is what I call the ZIP buy and sell signals. And we trade them at specific times. Like here, when we have the candle turn white, that means that the momentum of the market has shifted. And this is a pure ZIP, buy signal where, the currency, the gold here rises above the indicator line. Background has shifted from red to green. The white candle forms, it's a buy signal, and boom, you can see precursor to a very strong, powerful gold move. Now, what I also want to point out is here, yes, maybe some of you've been so smart, you had picked the perfect bottom here in gold. But I'm a big believer with any of my indicators or strategies that you always, you always want the instruments, the currency pair, gold, to turn first before buying. You don't want to just arbitrarily say 1950 is a strong support level, swing high, swing low. Yes, maybe you're right. You're right. But you want to make sure you have some sort of filter that shows that momentum itself has fully turned to the opposite direction before getting in. And that's what ZIP can do for you. ZIP can show you when the background fully shifts color, which is indicative of the longer term trend, and the gold has risen above the indicator line, which is indicative of the shorter term trend. It's all built in here for you. Then that should be your green light to buy. And as you said, Corey, this indicator is available, to all Surge members who are taking the edition for their first month.
Wonderful. So the indicator is included with the BK trading membership.
Yeah, not only Kathy's indicator, but my indicator, as which Kay said, is the new shiny thing. If you guys want to see how I would have traded dollar yen on a much more shorter term basis, we can switch over to my chart. Let me see if I can take presentation. Share screen.
And then for those of you in Twitter Spaces, if you want to tune into the charts, go to the YouTube link that I've posted underneath the Twitter Spaces, and you can watch the charts there.
All right. So you should be looking at my dollar yen screen. I'm going to explain to you my bounce indicator, which is something that we trade on a 1 minute chart. It's a much more shorter term time frame. It actually can be traded on 1 hours and dailies, but we're intraday traders here. So for those of people who are like intraday traders who like to scalp, this is the ideal environment for you to participate with us. Same with Kathy. My bounce indicator is available for anybody who's a BK member. And if you're part of the Surge Audition, you get that for 30 days for free. It's a very, very simple structure. The green line shows you the high of the day. The red line shows you the low of the day. This is the last 24 hours. Typical FX day, which starts at 1700 hours New York, goes to 1700 hours New York the next day, the global trading day. And we're going to go to replay mode because I want to show you the actual price action before the news, right? So that you guys can actually see how we would have traded this. So the news comes out at 8:30 New York time. It's about 8:10, 8:20. Let me just get a little bit bigger. I guess you guys can see this. It's like on a big schedule. And I'm just going to replay the price action, just kind of show you how we would have traded this whole price action. Boom. So let's stop over here. So first and foremost, news comes out. So 1 minute candle, big candle, right? Two things happen. Same as Kathy, I also have background zones. Background zones obviously tell you when things are positive or negative. So in this case, clearly sentiment. We call them sentiment zones. So if sentiment goes from red to green, that's already the first sign that something is important. But for us, we keep it super simple. And I'll show you how you can make money in the simplest possible way, because again, the how matters much less than the what and the when. This is the when. The when is the news flow. The what is dollar yen, which is obviously the most sensitive currency pair to US news, right? We change from green to red. This is the midpoint of the day. As you can see, this is real-time market. I'm doing it in replay mode, so this is exactly how the indicator would have looked at 8:30 in the morning. We go above the midpoint. Once we go above the midpoint, we consider this to be the uptrend. We define uptrend as anything above if you think about this as like if you're playing American football or European soccer. If you cross the midfield, you are in your opponent's zone. You're attacking. This is the uptrend. If they cross against you, it's a downtrend. You're defending, right? It's same kind of idea. Makes it very, very intuitive. So we would literally go long on this candle over here, 98. But let's just say maybe we waited another minute to let it pass. This candle certainly in the up zone. We're buying 3401s. You can trade it 2020, 1010, whatever you want. Let's say we're trading it for 1010, just a simple news scalp. So this is a 01 purchase, 91 is a stop. 11 is the target, right? Let's play this out. Let's see what happens, right? It dips a little bit against us to like 95, and then boom, boom, boom. 5-10 minutes later, no, not quite. Yeah, this is 14. Hits the target. We're done. And this approach, post news, works like a charm. Works like a charm for us across. You got to have a couple of components. You got to have a big U.S. news event, something material. You got to have. Obviously, this was a surprise. Surprises are always better. Like if it's in line, it's never going to work. the whole idea is displacement. The market needs to be displaced. But once it's displaced and you have all of the technical structural components to make it happen, it's a super easy trade. And for us, it makes it all very, very visual and very easy. So that's just one variation of what we do. What we do on a sort of a normal day-to-day basis, and I'll show you, I'll show you. This is we like to do. I'll show you a couple of trades that we did today. So first of all, let's go back to U.S. Open, market open. At 9:30 market open, we like to scalp the Nasdaq for 10 points target, 10 points stop, right? So it's an even money trade. And as you can see here, 9:30, the price goes above the midpoint. And look what happens. In the first 3 minutes, you see all that flow? We're long over here. It's a super easy trade. We're in at 91. We're out at 101. It's 105. It took us literally 1 minute to make $100, right? And so in the last, let me show you the last thing that we do. And then the last thing that we do is we trade what's called the swing trade. And the swing trade is kind of a 30-point target, 30-point thing, which takes a little bit longer. In this particular case, what happens in Nasdaq here is let's play this out so you guys can. Again, I'm going to go back to replay mode so you guys can see this in real time, because otherwise the chart gets a little muddy. So here we are. This is a trade we took that we just finished up, making money on it. So we're below the midpoint, downtrend. Right? In a swing mode, we're looking for the price to go from green to red, from buying pressure to selling pressure. Once we have selling pressure in a downtrend, then we have a lot of confidence that things are going to go down, right? Now, this trade took us a little bit, was a little bit trying, but it nevertheless worked out. So we're short 13.078 or 79. Target is 49. Stop is 109. That's literally was the trade for us, right? And we'll let it play out, and it kind of teases us over here to 55, then rallies back up, but does not stop me out. Rallies back up, but does not stop me out, right? Comes back down. Now, at this point, we were like $75 to the good. We're looking for a $100 target, properly weighting we played about a third of a lot on this. I was like, you know what? We're 75 in the money. It's good enough because the market is really, really choppy. And today, by the way, the market is horrible. The market is very, very choppy. So to have made any money is, you consider it to be free money. So we took the money, but actually, had I been patient enough, it took a while. It raced back up, raced back down, and then eventually came back down and resolved over here. And you can see that the yellow tells you that it resolves into positive territory. So you would have made money, but it would have really, really tested you both emotionally, financially, and exhaustively. And there was no reason. I learned this very interesting technique from Barry Ritholtz from the Big Picture Show. I'm sure a lot of people read him on the web. He's very, very famous. He runs the Ritholtz Wealth Management. And Barry taught me this really great trick. It's called a regret minimization framework. So the regret minimization framework works like this. You are $75 to the good. So the most you can make is $25 more, right? But if you lose and then it goes into a continuous losing cycle, we could lose as much as $1,000 if we're constantly scaling out of the position. So 25 more to the positive, or possibly 1,000 negative if everything goes wrong and the market goes totally whipsaw against us. It's not even a question. Once you start thinking in a regret minimization framework, your trading becomes a lot easier. So we just took early profits today, and that was it.
Of course, I have a question about the framework. What switched your decision to go from leaving it on to pulling it off?
This ugly market. Look at this price action. It's just, there's zero directionality.
So now I'm nervous about the trade. There's no directionality. It's a choppy market. I go to my regret minimization framework and I make that decision based off of that.
And again, it's not something I do lightly, and it's not something I do every time. But when it's obvious, this is the whole point. I trade automated. Kathy trades manual, and Kathy is sort of a proprietary trader. I'm a much more of a algo trader. But even if you're an algo trader, you have to have some human ability to understand the market. You have to understand context, and context today is horrible. Well, the other thing that was happening is we were also trading US 30, and US 30 took us to our maximum stress point before it finally made money for us, because US 30 was just horrible. It still continues to be horrible. Look at this chop. If you're trading direction today, you are dead. You're up. You basically, every time you buy, it sells. Every time you sell, it buys. It's just chop, 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 chop. And that's a very, by the way, traditional market. Monday, post-holiday, everybody's back. We don't really have any direction. Kathy said there's no news going on here. You got to understand the context. So when you're in this kind of context, you take what you can get out. Because you also have to understand what you are trading. Both Kathy and I trade continuity. Right? We both trade trend. Trend is basically continuity. And you can't force trend on a market like this. So when you can't force trend, then take your time and just, take what you can get out. So
I feel like we could have a whole discussion about regret minimization framework in a way that, in a way that the general public could understand. I think it's really interesting because I, oftentimes look at it that way, without the formal title of that, which is, what's the upside? If I'm looking for 2 more pips to target, am I going to stay stubborn and give up all the other pips I've made already? So I think, that's, it depends also on the time of day. And I think that's a really important aspect of trading that people don't give enough emphasis to.
Right.
Yes. And that goes back to my whole framework of what, when, how, and when is so important. So what's the when today? Today is Monday, post-holiday, no real news. Market doesn't know what he wants to do. That's a horrible when if you're in the continuation business. So you better be aware of that. It's not NFP Friday where we get a 500-point move because we have clear trend.
So that's interesting you said that, Boris. So when I asked Kathy earlier about what she looks at on the macro picture, you're looking more on individually, what, who, when. And so you're kind of not looking so macro, you're looking technical, but you are looking for outside influences that are going to either help or hurt your thesis.
It's honestly, it's half a dozen of one, 6 of the other. We're all effectively incorporating the technical picture, the macro picture, the contextual picture of the broad general market, even though we don't say it, even though maybe I'm emphasizing more, price action and indicators, and she's emphasizing fundamentals, but ultimately we're incorporating, I think every good trader incorporates all the information. And I think that's, the thing that I think Kay would probably agree with me that we both hate is people who say, oh, I never look at news or I think technicals are garbage. I mean, no. That's, it's like boxing with one hand tied behind your back. You are incomplete as a trader if you're not fully understanding the whole picture, because the market is a full picture. It's not just one little chart. It's certainly not support and resistance on a chart, which I see so much on YouTube. God,
right.
Kill me. I've never seen more cherry-picked examples. Oh, here's support, here's resistance from yesterday. Look what I did. I'm like, yeah, show that to me forward. Kathy and I trade the right edge of the chart. We trade the future. Don't trade the past for me. It's so easy to trade the past. I'd love to see any one of these guys trade the future for us. Let's see how well they do in the future. But we trade the future every day, every moment of the day. And one of the things, by the way, that I do that I just also want to let people know who are taking Surge or who definitely want to certainly join Surge as a as a evaluation tester, is we've now developed a full protocol for how we try to make between $800 to $1,000 a day on a $100,000 account. So with Surge, for example, you need to make $10,000, 10% on a $100,000 account, right? And we have a very replicable, very, very thorough methodology of how we try to make $1,000 a day. Now, obviously, you're going to run into some days where you're going to get, you're going to get clipped out. But when we get clipped out, we're down only 1.5%. So we try to make 1% a day. And if we're wrong, we will lose only 1.5%. And because Surge gives you 5% budget, we're well within budget of the drawdown basis. And the idea here is within 15 to 20 days, you can reach the target with very, very controlled risk, very replicable trades in a very methodical manner. That's what I try to do. That's sort of my goal. For example, I was in Jamaica last week. I was, having a good time, but we still traded. I was at 133 at the beginning of Jamaica, and today we're at 137. So that's
nice.
4% in a very methodical manner. Not like one big trade that I got lucky on. Lots of little replicable consistent trades. You know, and Kathy
Based
doesn't.
off of the indicators, or is this outside of that?
This is all of my bounce structure indicators. You know, so I trade my bounce structure, and Kathy trades her zip structure. I trade my bounce structure for indices. So this is we primarily make all our money in indices, and Kathy trades her zip structure in FX. And Kathy also has a very methodical approach of where she tries to make 100 pips a week. You know, in some weeks she makes a lot more, some weeks she doesn't make as much. But the point is, it's a very controlled, very methodical approach that plays very much into anybody who wants to become a good trader and become a funded trader. That's the most important thing, is become a funded trader, because you know, you're not. Yes, you could get lucky hitting a couple of good trades, but one of the things that I read about, which is really interesting about sort of like the funding trading world, is that so many people, even if they get funded, don't succeed afterwards because they're using these very, very luck-based techniques. So like, you know, even people who get funded, only like 1 out of 100 of those that get funded actually makes money, because they don't have the discipline to stay funded. And what
absolutely having a trading plan is what we found, right, is
and what both Kathy and I produce, and of course, you know, sometimes it works, sometimes it doesn't work. It's never a guarantee in the markets, but what it is a very, very methodical, consistent plan. As you can see, I mean, she's been trading her plan 3 years. I don't even know how many years.
Longer than that.
Yeah, a lot longer. But like, you know, she's got a track record of weeks and weeks and weeks and weeks, hundreds of weeks, where she's consistently making that 100 pips a week. And that's, you know,
well, I mean, in the past 3 years alone, you know, we've only had 4 losing months. And one was minus 15 pips. The other one was minus 60. One of them was bad, and that was minus 168 pips. And the other one was minus 73. And that's in 3 years of trading. So, but I think, you know, one of the things that Boris touches on that I think we really need to emphasize is the reason why we do so well. And the reason why the majority of traders who take the audition and pass don't do well in real life trading is because, you know, we have a very clear focus, a very clear target that we try to make and try to slowly accumulate. Whereas, you know, some traders who take the auditions and pass, it may be one lucky trade or 2 lucky trades that are, you know, very difficult to replicate. So if you're just banking your whole performance, your whole earnings on 1 or 2 lucky trades, that's, you know, probably the recipe for long-term disaster. Whereas Boris and I, it's about, you know, accumulating the targets trade after trade. I have at least 20, 30,000 trades. And, you know, that's how we accumulate slowly, focus on the target per day, per week, and then take our targets, go flat at the end of the week, and continue to add on to it. That's how long-term success is done.
Yeah. And I would just add one other thing to this, because I see this on YouTube all the time, because I watch all these other guys who, you know, support resistance, ICM markets or ICT market, whatever, like whatever is the flavor of the day.
You don't want to crash people right now.
All that stuff. We trade rules-based trading. They're like Kathy can do her trade, and I could do Kathy's trade, and you could do her trade. There is no deviation. There isn't like, oh no, in this particular case, I do it differently. I always watch, I love the videos where they go, see, in this case, here's my rule, but in this case, I made this trade because it was a little different rule, because it was a little different rule. Like, there's always an exception to the rule. We don't trade exception to the rule. We trade rules. Our trades are incredibly replicable. That's why people trade with us, because, you know, they can do the exact same trade as we do. And they do the exact same trade as we do. You know, some of them actually even do, I would make the argument, some of the people in my room trade better than I do, because they execute my trades a little bit better. But that's a very, very important component. It needs to be rules-based, so that I can explain to you my trade in less than 30 seconds, just like Kathy explained her trade. If anybody else who's going to spend like 5 hours telling you, oh, here's a support here, and here's a wick over here, and I took this wick, but not this wick, but I took that wick and not this wick because it was moving into the thing. Give me a break. It's absolutely impossible to replicate what is basically subjective trading on the chart. We have very objective trading. That's what makes, you know, consistent trades.
So we have a lot of people who come to us and they've traded before. They might not have a trading plan. So what you're saying is essentially they could join BK Trading, follow your trading plan, and have a start to finish trading plan with rules, with setups, everything they need to kind of start the ball rolling.
Correct. It's the best way to sort of learn the market, to trade the market, and of course you make it your own. I mean, people make our trading plans their own consistently. People change Kathy's trades. They're always commenting, you made 20, but I made 200 because I held on to half your position and it really, really moved. I'm like, great, wonderful. Other people will say, oh, you traded 3 times today. I traded like 100 times today, and it was like really an amazing day. I'm like, great. Everybody, you can take what we give you and make it very much your own. But the beautiful part is what we give you is very replicable. That's our value proposition. We don't hide behind interpretation. We have very clean, clear rules that work because we've been trading for tens of years. We know what markets do, and we understand risk and we understand control and all those things that come with good trading approaches. Yeah.
Excellent. Well, let me ask you this, because we get this question a lot. What knowledge should somebody come to you with beforehand? Are you guys going to bring somebody up from next to zero, or do you want them to have some background and some knowledge?
I mean, look, we don't consider ourselves a beginner service. You have to know, you have to have your broker selected. You have to know how to place a trade. You have to know, most importantly, what the value of each point of each instrument that you're trading. So what it means for you in terms of your account profits and size. You have to know, how basic indicators. I'm not going to explain to you, but I use moving averages, what they are. We're not going to explain to you what swing highs, swing lows are. You have to, you have to know how to use TradingView. So you have to, in many ways, you have to know how to use MT4 too. We do have videos on how to use MT4, MT5, but we assume that you've traded before. And if you traded before, for better or worse, and you're finally looking for some techniques that you can succeed with, we're the ones for you. But we're, not going to teach you, what it is a head and shoulders or
Sure.
what a swing high, swing low is.
Got it.
You
have to come with some knowledge.
That information is available everywhere else on the web.
Of course.
For super easy and super fast. And you're always free to ask us. I mean, we certainly will be happy to point you in the right direction. We also have an absolutely free MT4 training class. Like, in other words, how to use not even MT4, MT5, MT4. I use MT5 now. By the way, everybody should be using MT5 at this point. MT4 is really, really old. But the point is, if you want to know the basics of MetaTrader, we can certainly point you to the right resources for that. We have all the resources, and we'll point you to all those directions. If you just take the time to learn, it takes a weekend or two to absorb.
But
it.
as soon as you come into our room, you're trading. You're getting the ideas,
Yeah.
and
Right. You're swimming. We're not going to teach you how to float. You got to swim. But it's fine. It's fine. Like, lots of people who come into our room, they trade in the demo for like the first month, and they're like, I'm just learning and I'm using it. Great. Awesome. I also think in a way, using Surge, like, everybody's like, they always want to pass their test on the first try. And we all know that very few people pass. Like, do you go to a medical college? Do you think you're going to become a doctor on your first try? No, you got to take lots and lots of tests. And I actually think taking a evaluation, like a serious evaluation, that is, you're accountable, you're running numbers, is a much faster way to learn risk control than to doing it on a demo. Because within a prop environment, you are forced to be accountable. Like, it's much easier. It's much easier to cheat on. You can't cheat on a prop, and that's a huge value of using. And prop is very inexpensive. It's it's $500, $600 for a $100,000 account, right? If you were to fund your own account for $5,000, you'd burn it within a month. I guarantee you, everybody burns their first account within a month, right? So in this case, just think about this. You could take 10 Surge prop eval tests and get probably a million times better experience than funding your own account. So I think it's a great point. Yeah. I'm a huge, but I kind of like, I've sort of really, really, really gone the prop route now. I'm a huge believer.
It's catching on like wildfire. I mean, people are just following it, and it's such a bull run right now in prop.
I really, really, really understand now why, because it is, for a retail trader, that's probably the best education you can get is to try the prop account, and trade within a prop account. And if you're doing well, the upside is just enormous. It's like, oh wow, oh my God, I actually get real money to trade, which is something that you can never achieve anywhere else. So I think it's just
Right.
a great value proposition.
Excellent. Glad to hear it. Well, before we finish up, guys, I was hoping you could go over some of the week ahead type stuff. What are we looking at this week? I know we have some big earnings coming out on the equity side. Gold, always a big one. So give me your week ahead outlooks.
So, we already talked about how, and there are people who are joining us late, so I'll just repeat it, which is that last week, we had a tremendous amount of weaker U.S. data, and that, drove the U.S. dollar index to a 12-month low. And this week, we have less data, and the numbers that we have are what I consider tier 2 data, which is less market moving. And the market is pricing in an 85% chance of a quarter point hike by the Fed in May, yet the dollar is weak. So that's why I think this week there's scope for a dollar recovery. And we're already seeing that. And if the dollar continues to rebound, that's going to be negative for gold. And we're already seeing gold pull back as well below 2,000. So I think that's kind of the framework that I'm walking into this week with, because, today we had Empire State. Tomorrow we have building permits, housing starts, and then nothing on Wednesday, Philly Fed on Thursday, and then nothing on Friday. So that's a ripe environment for a dollar recovery. If you're trading other Forex instruments, the other big pieces of data watch is PMIs from Eurozone as well as from UK. Those are the most important pieces of Eurozone data that comes out. And so, that's going to be very, very important, because this is coming off the heels of the banking crisis. Did activity slow significantly in April, or has it recovered in the US like we saw in the Empire State? That's going to have a very big impact on the euro. And then this is also a very big week for the British pound, because we've got inflation, retail sales, employment, all the tier 1 reports that we look for in the US is happening for the UK this week. So the pound is going to be in play. And I also really like selling Canadian dollars, because last week the Bank of Canada left interest rates unchanged. This week we have inflation data, which is probably going to confirm the reasons why they left policy unchanged, because prices are starting to ease. So I really like the Canadian dollar to the downside as well. So in terms of FX events, that's what I'm looking for. And Boris, you can speak of, there's this big earnings week as well.
Yeah.
And, that's going to...
Actually, I want to talk a little bit about gold. We have Tesla coming up. We have, what was the other big earnings that we have this week? Today we had,
Schwab today.
Schwab came out. Schwab was a little weak on the deposit side. But, honestly, I think the big earnings were like the banks last week. They came in okay. The bottom line is, I do think so. We didn't talk a little bit about this macro at the beginning. Yes, we're going to continue raising rates, but we are very much at the end of the hiking cycle, right? So it may be one, maybe maximum another bip if things pop up. So I think going forward, the market is going to stop focusing on rates and the Fed and going to focus much more on growth. So the big question is, can we maintain the very, very decent, 2% growth that we're having, and then more importantly, the 10% profit growth that we're having, or we're going to have, a serious drawback from that. If we can just maintain that 8 to 10% profit growth, the market is up. Everybody hates this market. Nobody likes this market at all, which makes me all the more bullish U.S. equities, assuming, and this is the big thing, the one thing that could destroy the economy is oil going to 100. So we need to watch this. We're in a very dangerous geopolitical situation right now. Saudi Arabia, which essentially was our ally, has now become our, what I would call, number one enemy. They're making rapprochement with Iran. They're actually going to, the King Salman is going to, they has invitation to go to Tehran. I mean, there's a very dangerous development, because it means that, the whole, the two biggest oil producers in the Middle East are kind of colluding now. And of course, Iran is its primary function is to make life as miserable as possible for us. So geopolitically, to me, the single biggest geopolitical problem is not even Ukraine anymore, which is obviously always a problem, but it's the Middle East. It's amazing at how negative the relationship is with Saudi Arabia, especially given the fact that we pretty much supply them completely with armaments. So it's be interesting to see how we handle that. To me, that's that, and all of that, it turns into, can they push the oil to 100? Because they definitely want to push oil to 100. If they can't, we're doing great. If they can, that's going to be the one thing that's going to make the economy really wobble globally. But that aside, for right now, oil at 80, that's a relatively stable point. So the next point I wanted to show was gold, which was running 2000. And I said the key to gold wasn't that, it broke 2000, there was to hold 2000. And as you can see now, it's not really able to hold the 2000 just yet. And the reason why is, of course, US rates going up. If the Fed pumps another 25 to 50 basis points higher, that's very negative gold. Gold trades on what's called real interest rates. If real interest rates are negative, then it's positive gold. If US interest rates actually go up, that's going to be very, very negative gold. So this could be yet another heartbreaker for gold bulls, especially, and this is the key thing, if we watch these two levels, basically the 1950 level, 1980 level, coming into that 1980 level on a longer basis, it's kind of like 80, 50, and then the round number at around 1900, somewhere around here. All those levels, if US rates continue to kind of tighten up a little bit, that's going to be very, very negative gold, and we're going to see another decline. And all the gold bulls are going to be just crying, lots of tears. But for now, as long as we're kind of making higher lows, the trend is still higher lows. The trend is to the upside. And if we retake the 2000, you want to be long that retake of the 2000. But it's all very, very in the flow.
Sure.
It's all very, very event dependent at this point. So that's
okay.
Right now.
Great synopsis. Thank you so much. Well, guys, just in closing, I really want to thank you both for being here today, giving us your time, giving us your insights. You guys can find Kathy and Boris at bktrading.com. You can also find them on our website as well, SurgeTrader.com. If you have any questions, feel free to reach out to me, my support staff, or Kathy and Boris directly. So again, thank you guys so much.
Thanks, Chris. Thank you.
Talk to you on Friday.
Okay.
Very well.